morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look, as mentioned, at two of those locally listed banking giants, but Canadian-owned. We're talking, of course, about Scotiabank, Trinidad and Tobago, or SBTT, as well as CIBC Caribbean. Now, both groups would have reported varying fortunes in terms of their fiscal half-year results for the period ended, the 6-month period ended April 2025. Let's take a look at what each group would have reported and what investors might expect in the coming months ahead. Turning firstly to Scotiabank, Trinidad and Tobago, SBTT. Well, the group reported an earnings per share figure of $1.93 per share, which was a 5.1% improvement from the $1.84 recorded in that prior comparable period of 2024. Driving this performance was a fairly significant improvement in net interest income, increasing 7.6% from $701 million to about $754 million, with total revenues overall increasing 5.7% from $955 million to just under $1.01 billion. Non-interest expenses increased as well, but by a less than proportionate amount of 3.4% from $406 to $420 million, and overall profit attributable to equity holders improved that 5.1% from $323 million to just about $340 million. So certainly good reading for Scotiabank investors. Now, when we take a look at that revenue breakdown, we can see that 7.6% increase in that net interest income, really driving this revenue growth, and it's the second consecutive period of growth since the fiscal half year of 2023, 3.1% growth in 2024 half year, followed by this 5.7% increase overall. Other income fairly stable at $256 million from $254 million in that prior comparable period. Now, one of the major drivers of improvement in earnings for Scotiabank, in addition to its revenue growth, has been that managing of non-interest expenses, which Scotia's efficiency ratio, in fact, one of the lowest in the industry, if not the lowest, and further improving from 42.6% in that half-year period of 2024 to 41.7% in that half-year period of 2025. That the efficiency ratio, of course, the ratio of non-interest expenses relative to revenues earned, net of interest expenses. So what that means is that for every dollar of revenue earned, non-interest expenses has formed a smaller portion of that revenue generated. Now, in terms of asset composition for Scotiabank, we've seen some fairly interesting trends over the past few comparable fiscal periods, where total loans have actually grown from $24.4 billion in 2024 at the half-year period to $21.1 billion, or roughly 3.4 to 3.5% increase. Investments, however, would have significantly grown over those comparable periods from 5.9 to 7.5 billion, a roughly 27% increase, while other assets would have been fairly stable at between that $3.5 to $3.9 billion level. Now, in terms of valuations, Scotia is trading at that higher level from a price earnings perspective relative to the rest of the banking sector, with that banking sector average at around 9.5 to 9.6 times, Scotia on the right side of the screen at 13.7 times, NCBFG at the ultimate other end in terms of valuations from a price earnings ratio perspective at 5 times. And at that price of $52.50 and that price earnings ratio of 13.7 times, Scotia offers one of the more attractive dividend yields on the banking sector as well, 5.3% above that sector average of 4.7%. So keeping that modest revenue growth in mind, those attractive dividends and dividend yields, but of course mindful a bit of that those elevated valuations, at least from a price to earnings ratio, Bourse is maintaining its market weight rating on Scotia for the time being with a stable outlook. Turning very quickly to CIBC, and for their fiscal half year, well, the group would have reported an earnings per share figure in TT equivalent of 47 cents per share, which was a 26% decline from the 63 cents TT equivalent reported in the prior comparable period. Now, driving this performance was total revenue decline of 1.1% from just about 2.5 billion TT equivalent to 2.47 billion TT equivalent. Operating expenses increased 5% from 1.48 billion to just about 1.52 billion. There was a swing in credit loss expenses, moving from a release, which is a good thing in the first half of 2024 of 66 million to the expense of 92.3 million, which should have also weighed on performance overall, with net income attributable to equity holders falling from 993 million TT equivalent to just about 755.2. Now, when we take a look at the revenue composition of CIBC, we can see that net interest income was relatively stable at about 1.783 billion TT equivalent, whereas operating income actually declined 4% from 716 million TT equivalent to just about 686 million. Again, the first period of revenue decline for CIBC since in this particular period of comparison, 6-month comparison over the last 4 years. Now, when we take a look at segment profit before tax contribution, we can see that there were some notable changes. A 30% decrease in corporate and investment banking results from 913 to 637 million TT equivalent in that pinkish color, and in that orangish color or yellowish color, an improvement of about 90% in personal and business banking from 132 to 252 million TT equivalent, whereas wealth management swung from a profit of 34 million odd TT equivalent to a loss in its most recent concluded period of 47 million for that fiscal half year 2025. So at a price of $8.81, CIBC is trading just below the banking sector average at a price earnings ratio of 8.8 times, the sector average again 9.6 times, and offers investors a dividend yield of 3.8% based on its current trading price, below the sector average of 4.7%. But again, investors would be mindful of the very attractive prospect of these dividends being paid in US dollars. So with that lower revenue in mind and keeping an eye on those high operating expenses, but of course, a fairly attractive dividend yield still being paid in USD, Bourse is maintaining its market weight rating on CIBC for the time being with a stable outlook. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773. Email us at info@boursefinancial.com. And of course, you can check out all our research absolutely free on our website, bourseinvestment.com. And you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.